Thanks for starting your week with us. Hello and welcome to Business Daily. I'm Lee in Seoul. We have a lot of business stories lined up for you today, so let's get started with the day's highlights. The local shipping industry is sinking in mounting debt amid a global oversupply of ships and slowing demand from China. Businesses here in Korea are facing growing losses in sales because of customers who failed to show up for their reservations. The damage is in the billions. We have these stories and more coming right up. Greater competition and falling demand have left Korea's once strong shipping industry in choppy waters. Two of the country's biggest shipping companies are facing liquidity shortages and are finding themselves increasingly isolated, as other firms have decided their strength in numbers. Our Kim Mo-kyun starts us off.
Korea's top container ship operator Hanjin Shipping has decided to seek a debt settlement agreement with its creditors, including Korea Development Bank. Hanjin joins its rival Hyundai Merchant Marine, which is already a month into a partial debt settlement. The two firms have been suffering mounting debts amid a global oversupply of ships and slowing demand in China. Hanjin Shipping and Hyundai Merchant Marine's total debt reached $4.87 billion and $4.17 billion respectively as of the end of last year. The two companies' fate now lies with their ship rental negotiations with foreign ship owners. Korea Development Bank has made it clear that a cut in charter fees is a precondition for the extension of debt maturity and fresh loans for Hyundai Merchant Marine. Hanjin Shipping faces similar conditions.
Restructuring should be done based on the creditor's decision. If it doesn't work out, then the government could intervene.
Experts predict the firms will experience a further slowdown as world shipping giants have announced the creation of a new alliance called the Ocean Alliance next year to counter the M2 alliance formed by world's top two shipping operators, Musk and MSC. The government is set to hold an emergency meeting with industry professionals to discuss new strategies to deal with the current slowdown and the latest reform in the global shipping industry. Kim Mo-kyun, Business Daily.
And more on the challenges to surface from that new shipping alliance as the pressures of overcapacity and low volume are being felt on the global stage. A new China-heavy partnership is set to emerge next year. And there are already concerns that it could leave Korean companies in the dust. Our Eunice Kim explains.
Ocean Alliance is a giant coalition of 6 container operators, poised to together roam the profitable waters that link Asia and Europe. It's to set sail in April next year, pending regulatory approval, and among its members is the world's third largest container operator by capacity, CMA CGM, which is set to acquire Singapore-based Neptune Orient Lines. COSCO Group and China Shipping also recently merged, creating a transportation force to be reckoned with. Ocean Alliance is set to rise as the second most effective partnership only after number 1, 2M, European operators Maersk and MSC that currently controls 34% of the Asia-Europe route. CMA CGM estimates the new group will take 26% of that sea course as it operates 350 ships in some 40 countries, which will also be key in securing competitive rates. The shift in landscape, meanwhile, is expected to push the alliances Korea's Hanjin Shipping and Hyundai Merchant Marine are part of further down the channel, squeezing their market share to the 10% range from the current 20%. As belonging to the right club looks more important than ever, analysts expect more maneuvering to come, with global operators jostling to stay afloat in the increasingly competitive world of shipping. Eunice Kim, Business Daily.
And facing these conditions, the government is set to announce on Tuesday a financing plan for industries that urgently need to be restructured, with priority given to shipping and shipbuilding for their deteriorating liquidity. And on Sunday, a closed-door minister-level meeting was held, headed by Finance Minister Yoo-il-ho, with Financial Service Commission Chairman Im Jong-yong and Bank of Korea Governor Lee Ju-yeol among those present. A government source said the discussions were centered on preparing financial support for industries that need to be restructured. That will also include construction, steelmaking, and petrochemicals. This comes as many as 20,000 layoffs are expected to crop up in shipbuilding this year due to mounting operating losses amid near-zero new orders. And to tell us more about last week and this week's stock market action, we have our Business Daily's markets contributor, Choi Jin-seok, joining us on the phone today. Hello, Jin-seok.
Good afternoon, Jin.
All right, so let's get started by looking at the Korean stock market. Tell us about Friday's close and its overall performance last week.
Yes, the Korean equity market closed with a mixed picture on Friday. The Kospi fell by 0.3% to close at 2015, while the Kosdaq rose by 0.2%. Although both individual and foreign investors bought massive amounts of shares on the Kospi, a heavy sell-off by institutional investors spooked the overall sentiment. On a weekly basis, though, the Kospi rose by 0.3% and the Kosdaq surged by 1.2%. Also notable is the fact that despite major oil producers failing to reach an agreement on a production freeze at the Doha meeting, West Texas Intermediate, or WTI, enjoyed a third straight weekly gain, up by 8.3% compared to the previous week. Rising oil prices helped investors' appetite towards so-called risk assets. The Kospi closed at 2022 on Thursday, the first time the index closed above 2020 since December.
Then how did the Korean stock market close on the first day of this week?
Yeah, the Korean equity market didn't move much amid cautions from investors on a further market rally. The Kospi struggled to close on a positive note throughout the session, closing with a slight downtick. Despite massive buying from foreign investors who bought more than 160 billion Korean won or $140 million worth of stocks, a sell-off from institutional investors weighed down the index. Meanwhile, shares of Korea's largest shipper, Hanjin Shipping, fell as much as 29.9% this morning after the company asked creditors to restructure its debt in return for management control last week. The shares have fallen more than 60% over the past 6 months.
Now, the U.S. Federal Reserve is set to hold its policy meeting this week. What are the expectations?
Yeah, the Fed will hold its April Federal Open Market Committee, or the FOMC, from Tuesday to Wednesday local time. Since the Fed signaled a slower rate hike cycle at its March meeting, global financial markets have enjoyed a so-called relief rally. The value of the U.S. dollar has depreciated against major currencies due to the Fed's dovish stance as well. Experts predict the Fed will remain prudent at the April meeting. It's hard to expect a major policy change since there's no press conference at this month's meeting either. Also in the spotlight is the Bank of Japan, or the BOJ, which will also release the results of its policy meeting this Thursday. The central bank is expected to keep its benchmark interest rate. However, experts don't rule out the possibility that the bank will increase its annual asset purchase. If this happens, financial markets are expected to enjoy the effects of greater liquidity going forward.
And the fourth quarter earnings season in the U.S. continues this week. Which companies are drawing the most attention?
The world's largest company by market capitalization, Apple, will release its quarterly results after market close on Tuesday local time. There is a wide range of skepticism as of now. The tech giant itself already warned that it may suffer from an earnings decline. Moreover, experts now worry that the company will record the first ever year-on-year sales decline for its iPhone. Last week, the U.S. stock market closed with a mixed picture. Weak results from IT companies including Alphabet and Microsoft spooked the tech-weighted Nasdaq market, while most other indices rose slightly. We can expect investors to take a close look at how Apple's results will play out, as well as what impact it will have on the entire earnings season and stock market performance. This has been Choi Jin-seok for Business Daily.
Long-term slow growth has already begun for Korea's economy. This is the belief reflected in a survey conducted by the Federation of Korean Industries earlier this month, which shows that 70% of 61 economists said the nation has entered a period of slower expansion. 80% of that group cited weakening economic fundamentals as one of the main reasons. They also identified a delay in economic reforms, loss of competitiveness against Chinese companies, and the growing disparity in income as some of the key risks the economy faces. Over 90% said it will be difficult for the Korean economy to recover to previous levels even if the global economy rebounds. Despite slowing growth in China, the world's second largest economy remains on track to becoming the world's largest economy. That's according to UK-based Oxford Economics, which says China will make up over 26% of the global GDP by 2026. This is in real GDP terms, using the pegged exchange rate for 2010. The United States is expected to account for 15.6%, followed by India at just over 8%. Now, Korea is forecast to make up about 1.3%. The report says the global economy is expected to grow at a rate of 3.5% over the next 10 years in terms of purchasing power parity adjusted exchange rates, which adjusts price differences across countries. That's down slightly from the 3.8% growth seen between 2000 and 2014. Shared growth among Korea's big and small firms has been identified as a key business strategy that should be employed to boost global competitiveness. According to a survey by the Korea Chamber of Commerce and Industry on 200 large firms and SMEs, respectively, roughly 65% said shared growth policies will have a positive influence on the Korean economy. When asked why, companies said such policies will help promote the importance of growing together and resolve polarization between large and small businesses. While over 60% said the current degree of cooperation was satisfactory, more than half of the respondents said large companies need to step up support for small subcontractors. Slightly under half pointed out smaller firms should work on improving technology development. As more Koreans move to the cities, the number of residents in farming and fishing communities has sharply dropped to the lowest level since records were kept in the 1960s. Data from Statistics Korea showed the population of rural towns has dipped below the 3 million mark for the first time in December, shrinking more than 16% compared to 5 years earlier. And the trend looks to continue, with residents that are 65 years and older making up more than a third of the population, or nearly triple their ratio in the country's overall populace. The elderly residents were also part of more two-member households at nearly 52% last year, compared to the nationwide average of less than 27%. You might have experienced a situation when you've called to make a reservation but found the place is fully booked. Now, the problem is more people than you would expect fail to actually show up, and this is costing businesses a lot of money. Our Lee Joo-young tells us more.
One of the biggest difficulties business owners face these days may be dealing with customers who fail to show up for their reservations.
We run on a reservation basis, so if customers don't show up, then we basically have to throw away all the ingredients we've prepared.
According to Hyundai Research Institute and daily newspaper 조선일보, the combined loss in sales at service providers like restaurants, hospitals, hair salons, concert organizers, and express bus operators saw from no-show customers mounted to roughly $3.9 billion last year. When considering other indirect costs, the damage surpassed $7 billion, not to mention the reduction in employment potential by some 108,000 people. The study indicated the no-show rate was particularly high at restaurants, standing at 20%. At this, the Fair Trade Commission has launched a campaign to improve consumer behavior and raise awareness by distributing promotional videos and posters nationwide. Airlines have also joined in on the movement, with Asiana rolling out a $90 fine and Air Busan poised to slap consumers who fail to show up with a $45 penalty starting May. Experts also advise businesses to implement a deposit system for reservations to prevent customers from skipping out on appointments and mitigate losses. Lee Joo-young, Business Daily.
And that does it for today, but we'll be back tomorrow with more business news that matters to you. Thanks for watching, and goodbye.